Gold is money. It's the only currency, gold and silver, the only currencies that you can trust. Everything else is freely printed. Everything else is fiat. So the shock waves will be one of trust, and the shock waves are not going to be held just to the precious metals markets. It's going to, if silver fails to deliver, and I fully expect silver to fail to deliver in both New York and in London, but when it fails to deliver, that is going to affect all other derivatives because everything runs on trust, and it will probably create much, much higher interest rates in the US because borrowing is done based on trust. And if trust is collapsing, then we'll finally have a risk premium for owning US paper. Let's see what happens over the next 30, 60, 90 days. Because what's happening...
You think it could be that close?
Yeah, absolutely. What's happening, and this has been happening now for the last couple years, is it used to be that, say, 100 contracts were standing for delivery on first notice day, but by the end of the month, it'd be down to 10. Now we have 100 contracts standing for delivery the first day, and by the end of the month, it's 200 or 300. So the buyers are coming in during the month and saying, okay, I'm buying the contract, I want the metal. All it would take is one big buyer or a consortium of big buyers to come in and say, I want my metal, and it's completely game over because the metal does not exist to deliver. For years, we saw the retail market in the United States was a big buyer. The retail market is nothing now. The retail market is not even a tailwind. This is institutional money. I mean, these are hedge funds. These are private family offices. And in some cases, sovereigns. Look at Russia. They declared they declared silver a strategic metal, and they're buying it. Look at the imports into India. And those are official purchases. Look at it from both sides. There's obviously reasons for buyers to lie. I bought more than I bought, or I bought less than I bought. It's hard to know, but the bottom line is we're seeing massive demand. We're watching inventories deplete, and at some point in time, there is a tipping point, and that tipping point will be a failure to deliver. How long can they do it? Where the supply is going to come from? The supply is not there. The way to fix this is to raise the price massively to entice some people that have bought to sell, because right now, anybody who bought physical metal has not been a seller. I guarantee you there was no big tranches of silver or gold that were sold yesterday. Physical metal. That was all paper. And actually, you can see it's all paper because the Federal Reserve lent, $17 billion on Thursday night, and then they lent another, 35 billion over the weekend to the banking system. And where would the stress have been? It would have been in silver and gold. Look at the price of silver on Friday. It was up, $758, something like that. So those shorts had margin calls. The Fed helped them meet the margin calls and gave them enough to pile more paper on. The only problem is they can't print silver. They can't print contracts that have silver attached to them to deliver. They can sell contracts all they want and depress the paper price, but that is not going to satisfy silver, which is actually used. When the fiat currencies truly break and zero out, gold and silver will be the absolute core of whatever comes forth after that. So no, we're still early. We're early in the game price-wise. Time-wise, I don't know, because we could have a failure to deliver this month, next month, whatever. When it fails to deliver, then it's game on, or it's game over, actually. So you'll see the price of silver, the price of gold go to where it should, unfettered by derivatives, unfettered by futures contracts that are naked, have no gold, no silver behind them, but they're sold. The last part of your question, if I had nothing at all, I would start with silver because, it's nice to hold a 1 ounce gold coin in your hand, but it's also probably nicer to hold 60 ounces of silver that you're going to be able to use when a system breakdown comes. You're going to be able to use silver. Farmers understand silver.
How come silver was stuck in a 50-year box?
Copper wasn't, lead wasn't, gold wasn't, but silver was. Well, there are arguments about it being artificially restrained. Well, when a market makes a mistake, whether it's a bubble stock market top, goes too far, too long, when it compensates for the mistake, it often overcompensates. In other words, it has a tantrum in the new direction. It unleashes. In this case, is silver. It's compressed for half a century in an unreality that's not comparable to any other metal. And so it says, hey, I'm out of here. Well, if you take the dimension of silver's range of the last 50 years, $4 lows 50, $4.50, $4. Call it a tenfold range. What's tenfold above 50? Okay. If you take simply money supply, M2 chart, and go back to 1980 and ask yourself, how much has M2 grown since then, when silver was 50 then? Whoa! Or 2011 when silver was 50 again. How much is the money supply? If you factor that in, you're talking several $100 silver just to compensate for the decay in the money unit. Now, the other thing we've learned is when silver has a tantrum like this, and the run-ups to $50 were tantrums within the range, however, and copper, or the lead chart that I mentioned, where they did it in a couple quarters, we find that this immersion into a new reality quite often doesn't take years. It takes a couple of quarters. It seems to be routine almost, in fact, that when you have a tantrum like this, you get it done quickly and very efficiently, overcompensating probably. Well, we can come up with all kinds of reasons, both technical and the monetary fundamental, for example, that says, hey, $300 to $500 is only fair priced. And the history of these kind of emergences of markets from old realities to new realities is speed. And couple that with the fact that we're in an ongoing monetary bull market anyway. So it's not like silver's having to fight a negative trend with gold. Gold's in a positive trend. Silver is just saying, hey, I'm going to catch up to you. In fact, I'm going to beat you in terms of gain. And it started that as well when you measure silver versus gold on a technical basis, which we do month to month. We had a breakout last November in the spread favoring silver over gold. Well, what was the price of silver last November? $56. Dec, Jan, Feb. Of course, by January, it was 120. Okay. And now we've got an average price of the last 3 months of 75 to 80 average of the up and down violence. Right now, we're trading around 74, I think.
Yeah.
So anyway, a lot of factors say silver's broken out. It's got the monetary excuse. It has the fundamental excuse, and the technical scream at you that it's headed to a new reality. So that's why we come up with that number.
Yeah, backwardation, what you're talking about there is where the futures price should always be higher than the cash price because of carrying costs and interest. That's called contango. When you get the cash price above the futures price, that's backwardation, and that shows that investors don't want to wait 30 days, 90, 60 days, 90 days for their metal. They want to pay for it today, and they want it today. And now, from an exchange standpoint, as you just pointed out, the physical exchange is trading far above, and I mean that premium is blown out to $7, $8. Yeah, about $7 or $8. The cash market, the cash exchange, is ahead of the two paper exchanges, COMEX and LBMA. That is blatant, outright backwardation. It tells you investors are not willing to wait for their metal. They're not willing to trust that they're going to get their metal. They want it now. I 100% believe that this structural shift is it's permanent. It's what's going to be, it's the future. Paper contracts are not the future. Paper contracts are dying. And the same could be said for the dollar itself. The dollar is dying, and what's going to supplant that will be some type of BRICS currency that has some type of real backing. And they, obviously this has been the BRICS currency been in the works for years and years. And I think wiping away the paper markets being able to price metal, I think wiping away that ability is all part of bringing a backed currency forward that can be trusted. What happened in 1980, where COMEX said, we're not accepting any buy orders, we'll only take sell orders. That was when the world was truly US centric. We were the center of the universe for finance. We were the center of the universe for a lot of things. That's no longer the case. The COMEX could say, we're not going to accept buy orders and the price go to $3, but Shanghai goes over $100. What will happen is the rest of the world is now more powerful, if you will, than the U.S., where it used to be the U.S. was more powerful than the rest of the world. I mean, there's no way that they could outlaw buying on COMEX and expect the physical price to go down. Whenever you tell a human being that they can't have something, they want it even more.
Silver has broken out technically. If you plot it, go back 10 years, for example, you'll see